listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Bitcoin, Ether, Ripple, Litecoin, and more. Cryptocurrencies and other digital assets are taking the financial world by storm. This exploding market provides everything a savvy trader needs: volatility, volume, and liquidity. Provided you know how to find it. That's where we come in. Welcome to the Crypto Rundown. Each week we'll break down the latest trading activity, trends, and developments on everything from coins to tokens, futures, and even OTC options. If it's moving the crypto markets, then you'll find it on the Crypto Rundown. This program is brought to you by Genesis Volatility, also known as GVol, home of institutional-grade crypto options analytics. Whether you're trading CeFi options or DeFi options, cryptocurrencies move. Use GVol Analytics to analyze implied volatility, model realized volatility, structure positions, and unlock alpha. For more information, visit gvol.io. That's GVOL.io. Now it's time to dive into the exploding world of cryptocurrencies and digital assets. It's time for the Crypto Rundown.
All right, everybody. That music means it is time once again for the Crypto Rundown, the program here on the Options Insider Radio Network, where we break down everything going on the crypto side of the fence. We're going to talk the Bitcoin, of course. Going to talk the ETH, the spot, the futures, the options, the volume, the volatility, the SKEW, all that good stuff, and a whole bunch more. My name is Mark Longo from the OptionsInsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. Reminding you, if you like what you hear for this program or anything we do here on the network, usually a couple of shows hitting you at least a day here on the network. Make sure you keep those reviews coming on your platform of choice. You saw a massive influx of newcomers to the markets and indeed to the network last year, and certainly to crypto. In fact, in the last few weeks, a lot of people's eyes have been opened to exactly what the possibilities and potential pitfalls are out there in the crypto market. So keep those reviews coming. We do love to see all the new folks joining. Of course, keep those questions coming too. We do love to hear from you guys. And let's see who we're hearing from today on the old Crypto Rundown program. I do believe, if the technology gods are smiling upon us, that we are joined once again by Mr. Eric KOVALAK, the managing partner over there at VELLUM Capital. Eric, welcome back to the Crypto Rundown program.
Hey, Mark. Good day. Good to talk to you.
Happy New Year to you. And not much going on. I think we should just end the show right now. What do you think?
That's right. Nothing to see here.
Nothing to see here at all as we head right on into the Bitcoin breakdown.
It's time to explore the latest trading activity, trends, and developments across the world's leading crypto market. It's time for the Bitcoin Breakdown.
All right, everybody, welcome to the Bitcoin Breakdown, the portion of the show we break down all the action in the world's leading digital asset, and it's moving. If you don't like where it is, listeners, just wait 5 minutes. Of course, if you just listened to this show and to last week's show, you might think not a heck of a lot happened. A decent week, but not a lot. Last week on the show, we were about a little north of 31,000, about 31,100. And coming into start of the show, we're at about a little bit north of 31,700. You might think, 600 handles, not a heck of a lot. That's a decent run for Bitcoin, but given what we've seen of late, not a lot. But that, of course, that show-to-show analysis belies the turbulent, some might say insane week that was going on out there in Bitcoin. You know, we've been talking for a while about the upside and all the upside positioning in the calls out there in Bitcoin. We'll probably get to that again a little bit later in the show. But we were looking at strikes in the 30-plus thousand, saying those are insane. And now they're close. And then, of course, we hit 40,000 and then blew through it this week. Hit a high just a hair's breadth away, listeners, from 42,000 out there in Bitcoin. So pretty much north of 2x of the highs. Remember, everyone thinks we got to 20,000 back in 2017. We didn't. Got ever so close to it and then retreated, and then the crypto winter began. I'm not saying it's happening right now, listeners, but still, we saw a huge rally, and then now just a very aggressive turnaround off about 10,000 handles, or pretty close to it, from those highs of earlier in the week. So, like I said, Eric, not a lot to parse, so I can understand if you want to just hop off because the show is boring. But that aside, obviously a lot has happened, even in the last few weeks since you and I chatted last year on the show. So catch us up. What have these insane, tumultuous couple of weeks and months indeed been like for you guys over there as you're managing capital in these crazy Bitcoin markets, sir?
Yeah, well, I think what's really changed is people's awareness for this narrative. To me, as a fund manager, I'm very sensitive to the idea that cryptocurrencies are this kind of ghetto cult of the financial world. And in many ways, they have reason to be considered such. Crypto people have their own language. They have their own nomenclature. They have, technical babble and words that talk about this stuff that makes it extremely inaccessible to average people who aren't, millennial and younger with a technical background. So I get why the investment community as a whole sees it as that thing over there in the corner that nobody knows how to turn on and play with. However, when you have a market that starts approaching $1 trillion in market cap, and I will say, and this is one of the things that excites me, has tremendous liquidity. You have something that people ought to start asking a series of why questions. Why does this thing exist? In the last month, we went from what I would say was the old narrative to the new narrative. The old narrative was, the smart kids out back are playing with this new thing, and we're not really sure what to do about it. Till, wait a minute, if I'm not playing with it too, I'm going to be left behind. A little bit of the fear of missing out. So it's not lost on me that you have a large number of people, I would say 40 and younger, who in the last 3 months saw their net worth go up substantially because they own a bunch of cryptocurrencies that they captured back in the first generation of crypto when Bitcoin was $35 and you used to give them to your friends for free just to show them how to do it. And these guys are now suddenly sitting on 7- and 8-figure crypto wallet accounts, and they are looking at themselves, gauging a little bit, okay, this has just changed my life. How do I reference this? And that in some part might be a little bit of the action we saw this morning when crypto went from 40,000 to 30,000 before I had finished my morning 5th cup of coffee. I think that part of this is market technical. Part of it is the narrative went into a feedback loop from 30,000 to 40,000, and as you know, feedback loops have to loop back around to substantiate. Part of it is the community that's involved is turning into transferring from speculative to really having enough money involved in this whole process to now consider what's this mean to me and the rest of my life, my portfolio, and then also the usual ebbs and flows of the market, the mechanics of the market.
Yeah, all those crypto hodlers, you're right, they're sitting on all those assets, and the rest of their assets were parked in Tesla, which is also doing pretty good probably right now. So yeah, it's been a banner couple of weeks, maybe not today, but a banner couple of weeks out here for those assets. Of course, you mentioned the downturn. You're right, we did see this kind of abrupt turnaround once we hit those highs, which again is not entirely outside of the realm of question. We saw an absurd run-up. You're going to see some profit taking at those levels. We're hearing a lot of talk that the miners are starting to unload some just because why not? The levels are beyond what anyone calculated in the near term unless you're that one options trader we're going to talk about maybe a little bit later. We also saw some spooky language coming out of some areas like the Financial Conduct Authority over there in the UK, who pretty much warned folks that if they're investing in crypto assets, they should be prepared to lose all of their investments. Not the kind of language you like to hear out of regulators. So that, I think, spooked some people, Bank of America and others, calling this the mother of all bubbles out here in Bitcoin. So a lot of this narrative starting, I think, to weigh on this as well. You think that's what it is, Eric? Kind of a combination of all of the above. We have, of course, this maybe negative narrative. We, of course, have very highly understandable profit taking. Are you hearing from folks who are mining out there and stuff that this is their time where they're unloading their stocks, sir?
I think that, first of all, in 6 hours of trading, we've gone from 40,000 to 30,000. That's not enough time for a narrative to really change in any meaningful way. People who are involved in the crypto space have a big vision for what this thing could become, and they recognize that they might be wrong. They may not have the right view of the future of financial markets. Okay, fine. But if they're right, they know what it looks like, and they want to be right. And so in that case, being up or down 25%, even though it seems like a very large notional number, 10,000 points of movement, it's still 25%. I don't think that's necessarily going to shake anybody out of the trees on this one. As far as the regulatory environments, I think it's fairly likely that as the value of these assets continues to increase, and I mean, suddenly you're going to have a bunch of digitally controlled assets that are larger than the GDPs of many nations. And that's going to cause regulators to respond to that, and not necessarily in bad ways, because if they have welcoming regulations, it will attract that money to their domicile. Switzerland's been a great example of this over there in Zug. They have a whole development community just geared for cryptocurrencies. And I know it's attracted millions and millions of dollars of capital to a small area because they know it's welcome there. So I think if they have good regulations, it'll attract capital. If they have bad regulations, it'll scare the capital away. And so it really matters on how heavy-handed they want to be in playing with this new idea we have as a world called cryptocurrency. I think we'll see more and more and more news and threats of regulations because these are going to become bigger items, and it's going to become a larger part of the economic story. And so you will see regulators respond to it. But as far as traders go and why these prices are moving, they're not moving from regulations, and they're not moving because the narrative's changed. This is purely a mechanical aspect of the market. It was seeking pricing and seeking liquidity. I think, again, you have a selling cascade that just happened. It would not surprise me in the least if we're over 35,000, which would be half of that, half of the move on the sale today, if we're back up over 35,000 in the next day or two. I think, Mark, what's interesting here is look at this as a risk-on and risk-off perspective relative to the equity markets. The equity markets were down a little bit this morning. Dow was down over 240, I think, at one point on the futures. And that is probably in response to some of the things that are happening geopolitically, both in the United States and outside of the United States, and also because the equity market is exceptionally high. Those two moves, cryptocurrencies and the equities, if you look at them in tandem, cryptocurrencies have way overextended relative to the equity markets. Now, it's not to say equity markets won't catch up and we'll have a whole week of selling on the equity markets. It's possible. I don't personally think it's probable. It's a possibility, in which case then Bitcoin would really look smart at this moment.
Yeah, you mentioned that 35,000 level. The way it's moving now, it could be back there by the end of the show. Who knows? It's the instrument that is certainly interesting to watch. At the very least, I know a lot of our audience tuning in to the show don't even trade crypto, but they just can't look away from these markets. They're certainly a lot going on out there. Let's break it down a little bit. Of course, all these analytics coming at you courtesy of our friends over there at Genesis Volatility. Kick the tires for yourselves over there. gvol.io is the place to go. They break it down a lot of interesting ways, like the 1 hour vol. And that 1 hour vol, hey, remember, Bitcoin is moving a lot hour to hour. Eric just broke it down. It's only been a 6 hour swing, really, that this movement we're seeing, this downturn has come here in Bitcoin. So breaking it down hourly does provide a little bit of interesting insight. On our last show, we were just a tick under 100% on that hourly vol, 99.87. Of course, in the interim, as we're seeing this enormous run past 40,000 and they retreat back down, we've seen vol spike even higher, got up to about 141. 141% listeners on January 10th. That's for those of you who don't trade a lot of options, aren't that conversant in volatility. That's roughly 3x of what you would consider a very volatile asset class already. You don't see a lot of major asset classes at trading, let's say, close to a 50 vol, let alone 140 closing in at 150 vol. So there's a lot of vol, a lot of juice in there. And right now it's still fairly elevated at 135%. It's only a few points off that peak just coming into showtime. So just a lot of action, a lot of vol, a lot of juice out there, which, again, it's hard to argue that it isn't warranted given the enormous swings we're seeing out there. That 30-20 SKEW, so all those options and those 30 to 20 delta strips on the call wing and the put wing, it peaked at about a 19 on the 6th of January. Is that about a 10 on our last show? And coming into today's show, something strange I haven't really seen before over there. I'll have to dig into a little bit more over there on the Genesis platform. It was flat, which I guess in the recent swings we've seen out there is kind of understandable. We saw the huge move to the upside, generating a lot of interesting calls. Now a very aggressive retreat to the downside, prompting a lot of near-term interest in puts. So maybe a little bit of that skew flattening out, perhaps. Not surprising. We'll have to wait and see how that evolves over the course of the next few hours. Forget the next few days, because that skew has been moving around quite a bit. The open interest hour by hour, also fascinating thing to watch out there. It peaked at about 222,000 on our last show back on the 4th. It dropped off about 185,000 as a lot of options rolled off the board on the weeklies. And coming into today's show now is back up to about 201,000. So a lot of paper out there in Bitcoin land out there. Open interest from a notional volume perspective, also pretty strong out there. Remember, not too long ago, listeners, we were talking about all the venues, so the DEREBITs, your CMEs, your BAKKTs, your Ledger X's, all those added together was working to threaten 5 billion, maybe 6 billion in total notional OI out there. And recently that spiked north of 10 billion out there, listeners. So pretty aggressive stuff. BAKKT itself was north of 8, almost 9 billion just by itself. So just tons of notional OI. Some of that's come off now. Coming into today's show, we're shy of the 10 billion level again, but still, you're talking almost 2x the levels that it was straining to break not too long ago. We were shy of 5 billion not that long ago, mid-December. So this is pretty much 2x in terms of notional OI, which again, given the swings we've seen out there and how much mind share has suddenly turned towards crypto, as Eric was just alluding to, not surprising that we've seen the notional OI pretty much double over the span of not even the last month, just the last few weeks. How's that breaking down right now? Come into Showtime. Net OI calls to puts out there. It's calls still leading the dance, but not as aggressively as they were. Hence the skew getting a little bit flatter out there. The calls come into Showtime was about 124,000 open versus about 84,000 on the put side. So you're going to mostly see calls leading the dance out there unless we see this sell-off really exacerbate. Right now, puts are still holding their own. 84,000 contracts open in put land out there. Overall, volume-wise, we've also seen some pretty impressive numbers out there, particularly on the big dog DEREBIT. We were talking not too long ago about hitting a new high out there in DEREBIT, about 1.1 billion or so. Now blowing through that recently, hitting its new high now is about 1.5 billion. It's hit that twice so far this year. First on the 2nd, so roaring out of the gate to start the new year, and then again on the 6th, just last week. So very aggressive numbers. And of course, today, coming into Showtime, there were already 1.4 billion worth of notional volume on the tape over there at DEREBIT. So there's a very good chance it could blow through it today. In fact, it may already have as we're talking here on the show. So we could be setting a new record today, 1.6 billion, 1.7, who knows out there. Extreme activity out there on the options front. Eric, I have to imagine none of this news, the doubling of OI over the past few weeks, the aggressive nature of the volume out there, none of this probably comes as a surprise to you, sir.
No, not at all. I think it makes a lot of sense. I think we saw the bookmakers get stretched a little bit on that rip to 40. I may have said once before on our show, but Sunday night when everybody's sleeping, everybody is away from their screens, it's when these big moves start, and that creates a lot of volume in the option space.
Yes, it does. Let's look at some of that volume right now. Where are people lining up out there in Bitcoin options January? I mean, people like a quarterly in crypto, but Jan still leading the dance right now. Again, it's hard to argue. We're seeing huge near-term swings, so a lot of near-term options paper is going to pop up. 82,000 contracts on the tape in January. It's not quite 3x. We're pretty close to what we're seeing in March. March only has 37,000 contracts. And again, if you add up all the weeklies in January, that's just the monthlies have 87,000. If you add up all the weeklies, it's a lot more. So Jan, very active, and the weeklies starting to really light up as we're seeing a lot of near-term swings out there. In terms of the strikes, I think you folks can probably guess what is still number one, which is very interesting because we blew through this strike, which it sounds crazy to say out loud, but we did. 36,000 strike, those calls we profiled. Still the number one open position on Bitcoin options, about 22,000, which, if you remember from last week, is the exact same number. I thought for sure they might start taking some of these contracts off the 20,000 strike. Number two with about 14,800. That's down a little bit from last show. And, of course, our old friend, the 52,000 strike. Still number three at about 14,000. That's up, actually. It's up about 3,000 contracts from last show. So someone piling into more of the 52,000s. Maybe they were rolling. Either way, those 36,000 calls still open, listeners, which is interesting, perhaps a bit head-scratching. I mean, they were already just the gamble of all gambles, and they paid off. Remember, of course, there probably was another position against this. This could be a risk management trade, so we're just going to look at it through the lens of this options trade. There could be something else against it, which maybe not looking as good, but from an pure options perspective, this one is the home run of home runs. I mean, first traded back on October 30th. Someone printed, looks like about 28,000 of these bad. It went up in blocks of 8,000 and 2,000 and 4,000. So yeah, there was about 20,000 that went up close. I think maybe 18,000 on that day. They spent not an insignificant amount of money, $762,000 to put this position on, listeners. So this was not just some mere whim, some mere roll of the dice. And at the time, Bitcoin, how cheap it seems now. It was $13,285. They paid 0.003 Bitcoin for that, which worked out to about $40 for one of those calls, which they, at one point, again, I'll have to dig in to see exactly how high they got on the apex, but at one point, obviously, we were north of 40, so those calls were worth more than $4,000. So talking about 100x, at least 100x, probably more. You start adding in some of the vol and swings out there, which, we were talking recently on our Volatility Views program about how well our friend 50 Cent did out there in the VIX calls, which, of course, he put him on for around 50 cents, hence his moniker. And they got up to around $45. So that's about a 90x return. That's pretty good. But it looks like our friend out here doing even at least 100x, and we'll have to parse it to see exactly how high those got. Eric, it's hard to really parse this trade with a straight face. When they put it on back at the end of October, we kind of dismissed it. It seemed outlandish. It seemed absurd. Some people were speculating that it was done as a risk management trade to kind of take some net short units off the board, and that could still very well be the case out there. But what are your thoughts on this, which is just on this leg alone is transforming into one of the better trades we've seen in a long time, Eric?
Yeah, well, everybody loves a good spec trade. It is a ton of fun going back and figuring out how much money you could have made if you would have seen some M&A action in the back of your head, or if you would have, knew, which event was going to happen that was completely unforeseen by the rest of the world. So it's interesting, right? The leverage and the return ratios are interesting. What I think is more interesting in the space right now is this IV we have. I mean, anytime you can sell 130 IV, which is coming down as we speak a little bit, but it's still pretty pumped up there. Even just selling puts, cash secured puts, the edge is so much in your favor if you have a long-term thesis on the underlying that I think things you can do systematically. I think net you'll make more money for most investors. The spec stuff is neat, but right now, I mean, with vol at 130, 140, 150 on the wings, you're not going to have a spec trade that's going to get you that kind of return. Long term on traditional equity markets, once the vol is up, if you get a similar type of move, your 100, I got to do the head math on here, but your 100-to-1 trade is looking a lot more like a 6-to-1 when they pump up the wings like that. And a 6-to-1 probably isn't enough to take advantage of the opportunity set and the likelihood of occurrence. So that was great then. What's great now is trying to find ways to either sell calls against existing positions and bring in some extra premium, or sell puts and try to collect some more Bitcoin.
Are you saying that putting on extreme upside lottery ticket bets that require the underlying to pretty much triple over the course of a month or two, are you saying that's not good risk management? Are you saying that's not good due diligence for your investors there, Eric? How dare you, sir?
That's a trapdoor question. Obviously, we like to make as much money as possible, but we have our thesis, and our thesis is that we are here today and in the future will be somewhere else, and we think somewhere else is a much higher crypto price. I don't think, obviously, buying way out of the money, highly priced options is necessarily the best systematic strategy for executing on that theory. But if somebody is highly speculative and or undercapitalized, more power to you.
Yes, it's certainly hard to recommend a trade like that. It's, coming onto the craps table and playing the yo and then making a ton of money. And then people saying, that's a great trade. That's kind of analogous to what we're seeing here. But, interesting nonetheless. Our folks like a good, profitable spec trade, and this one certainly qualifies. Again, we'll have to crunch the numbers to see exactly how well it broke down. But so far, at least, it's hard to argue against this. And of course, they didn't take it off. So again, it's all paper money at this point, and we're now back below that strike again. So still an awesome trade, but nowhere near as impressive as it was, let's say, a few sessions back. Speaking of impressive options out there, CME putting out some numbers over there. They crunched the numbers for the year that was over there on CME Bitcoin options. And like I said, they've off to a slow start, but still in aggregate, they did some decent paper. They said 37,300 Bitcoin options have traded since they launched nearly a year ago, so over the entirety of the year of 2020 out there on CME land. They said their OI is spread across 92 strikes, about 30% concentrated in the strike range between 30,000 and 40,000, hence our friend's favorite strike there, 36,000, squeaking in over there at CME as well. And they say their OI is pretty much distributed between Jan, Feb, and March evenly out there, which kind of lines up with what we're seeing out there. Not a huge rock'em sock'em robots week for them. The big day was Friday, 219 contracts. Again, remember all this, these are all 5X contracts here, so do the math over there. 112 contracts on Thursday. The rest of the day is well shy of 100. Today, though, coming at showtime, about 100 on the tape, so a little bit more paper lighting it up, as you'd expect, given the swing out there. Bitcoin futures, similar story. They've been very active of late. Got 25,000 or so were on the tape already coming into showtime today. Friday, 18,000, 20,000 on the tape. Thursday, about 21,000 on Wednesday. 10,000 on Tuesday and about 17,000 on Monday. So the beefy multiplier doesn't really seem to be putting people off on the futures front. On the options front, people seem to still be a little bit hesitant over there. They crunched some numbers over there at CME for the futures as well. Average daily open interest hit a record of 11,100. That was on Q4. That's up 233% from Q4 2019. Average daily volume up to nearly 10,000 contracts, 9,953. That was in Q4. It's up 106% from Q4 the year before. And they said 6,700 unique accounts have been trading these futures since launch. Unfortunately, can't really say the same thing for the BAKKT folks. They're doing a little bit of paper, 1,244 contracts on the futures side. It's actually up a bit. It's up about 300% from recent. So maybe there's a bit of a resurgence. Maybe the news today has something to do with that. The news out there that BAKKT is going to merge with a acquisition company called VPC Impact Acquisition Holdings, sexiest of names out there, to create a company called BAKKT Holdings, which will be listed on NYSE. Go figure, ICE owns NYSE. ICE, of course, spun off BAKKT effectively there as well. So keeping it within the family, but maybe some of this news perhaps driving some of the paper we've been talking for a while, why there's still literally no options paper on BAKKT, and the futures are still comparatively anemic. But maybe this sign of this renewed interest in all things BAKKT will perhaps drive some paper. But of course, there's a lot of interest in products outside of Bitcoin, so let's get to it as we explore the altcoin universe.
It's time to move beyond Bitcoin and find out what's moving the rest of the crypto marketplace. It's time to boldly venture into the altcoin universe.
All right, everybody, welcome to the altcoin universe. Let's kick things off top 10-wise here. Number 10, Binance Coin. Number 9, Chainlink. Binance Coin's at about 5.3 billion. Chainlink at about 5.4 billion. Number 8, Polkadot, 7 billion, 7.1 billion over there. Number 7, Cardano, a little bit north of 8 billion. Number 6, Bitcoin Cash, 8.1 billion. Number 5, Litecoin, holding firm around the number 5 spot at 8.4 billion. Number 4, XRP, 12.5 billion. Number 3, Tether, at about 24.2 billion. Number 2, it's ETH at 114 billion. And number 1 with a bullet, Bitcoin, as of this chart, that was still north of 32,600. That put it at about a 600 billion market cap. Eric, I think it was you maybe on the show recently who was postulating about a $1 trillion market cap for Bitcoin. It seemed absurd. It seemed outlandish on the time, and now we're about 2/3 of the way to that, Eric.
Well, that's part of this changing narrative. I think just look at other things that are scaled in our world. You have a car manufacturer with 1 or 2 car factories that makes electric cars almost at a $1 trillion market cap, not far from it. You've got a computer company in California that makes really great, phones and computers, and their market cap is a couple $1 trillion. These are single companies in one country of the world Now, not a very large country when it comes to population, but a large country when it comes to economics. Imagine the rest of the world all participating in the market share of those companies. That's the kind of scale we're talking about of cryptocurrencies. And it's not going to be every one. It might only be one. If history says anything, like social media, a lot of these other large network-driven firms, it'll probably be one or two major assets, maybe Bitcoin, Ethereum, maybe a bunch of stuff based on Ethereum, maybe some new thing. And this is really in the cards yet, I think, because we are early stage in this market. Some new innovation could come along that could take the best of all we know, plus that little bit extra. Maybe a really great user interface that would allow people who don't want to be technocrats to safely, comfortably, and efficiently engage the blockchain technology and use it for the currency aspects of it. That could easily push this thing into a $25 or $50 trillion market cap simply by necessity. It would take that much money and volume to act as an intermediary of exchange. Is that going to happen this year or next year? Probably not. This is a long-term vision that's going to require some generational knowledge gaining, some knowledge gained by the different users of this space. But it's possible. There's no reason it's not possible. And if you look at the assets right now, Bitcoin and Ethereum, intellectually, what is to stop them from moving at today's prices to 3 to 5 times larger than they are now? There isn't much. There really isn't.
No, that's the case. It might be a good poll question out there. What will hit 1 trillion market cap first, Tesla or Bitcoin? Of course, both of them have a little bit of a down day, retreating from that. But I mentioned, Bitcoin 600 billion, Tesla's about 760 billion out there. So interesting. Might be a fun little poll question. Maybe we'll put it out there, producer, and have it run for the rest of the week to see what our audience thinks, which will hit the 1T level first, the 1 trillion level first, Tesla or Bitcoin. You put Tesla or Bitcoin in anything these days, and folks are going to respond, whether it's positively or negatively. It depends on their view, obviously. But those, I think Mr. Sebastian on our last program called it the Tesla and Bitcoin complex, and there certainly is something to that. But let's get beyond Bitcoin really quickly here, going out to the altcoin universe. And ETH is the big dog out there, listeners. On our last show, ETH was north of 1,000, 1,114. Coming into today's show, we're at 976. It's ticked up a bit since then, about 983 right now. So you might think, again, show to show, not a heck of a lot going on over there on ETH from show to show, but actually in the interim, once again, hitting new highs out there. Not quite an all-time high. The all-time high of ETH is 1417. That's back in January of 2018. But we got pretty darn close to it, 1279 or so. So threatening that 1300 level in ETH before retreating off of it back below 1,000 where it is right now. That means our vol's been moving. Our vol's been shaking out there. Let's go out to the 1 hour vol out there, listeners. On our last show, remember, it was about 133. So again, that's already very volatile. And yet it peaked well beyond that. Hit up to 181% on the 10th of January. And coming into today's show, still frothy, still volatile, 167% as ETH keeps swinging. Same deal on the SKEW front. Last show, it was about 20 and then peaked at about a 32. That was a little bit earlier than the vol, actually. The vol peaked on the 10th. The SKEW peaked on the 8th with a 32. Coming into today's show, it's almost 11, 10.7, a little bit shy of 11. Tons of paper on the tape. In fact, last week we saw, on the show day actually, the 4th, we saw 264 million worth of notional volume going up on DEREBIT from ETH perspective. That was a new high out there. We'll see if we threaten that today or not. 197 million on the tape today. So we're strong number 2 right now. We'll see if that could eclipse that or not. 196 million also hit on the 5th, the next day. So closing in on 200 plus million days multiple times. We hit it also on the 3rd, 213 million out there. So prior to that, we were talking numbers in the 90, 100 plus million levels. Not a ton. So we're talking already 2x what we've been seeing recently out there in ETH from a volume perspective. In terms of OI, obviously calls still leading the dance, but not as aggressively as perhaps they were out in Bitcoin. 704,000 contracts on the tape over there in ETH. DECE, of course, has come off the tape in the last month or so, and DECE was a huge amount of open interest in ETH. So they're still struggling to put that back on, but gotten a good chunk of that cracked away on now as more paper is flowing in. The put's also pretty active, 526,000 contracts on the tape. On the put front, OI hour by hour, similar story, pretty strong. It peaked at about 1.5 million back on the 25th of December. And on our last show, we were at about 1.3 million. And then coming into today's show is at about 1.2 million, 1.19 million to be precise. If you're wondering where the lion's share of the action is out there from a monthly perspective, where the OI is lining up, March is leading the dance. So a little bit different than Bitcoin there. March leading the dance with 299,000. Jan has about 241,000. Of course, if you add in all the weeklies in Jan, a little bit of a different story, but still monthlies, March, still leading the dance. And if you're wondering where the OI is lining up from a strike perspective, that's an interesting story as well. Following this for a while, it's been deep strikes in ETH. The 400 strike and the 480 strike that have been dominating the tape, and that's still the case. Coming into today's show, the 400 strike has 88,000 contracts open, followed by the 480 strike with 74,000 contracts. The 800 strike, which is a little bit closer to where we're playing right now, 50,000, and all the way up to the 1280 strike has 48,500 contracts open. So, interesting strike selection. Eric, I know you guys look a lot at Bitcoin over there, but anything lighting up your tape from an ETH perspective these days as it continues to swing wildly, sir?
Yeah, sure. I think Ether is actually, and this is a good point to note that it's kind of an internal debate among our managers at the firm. We do have some folks who are Bitcoin maximalists, and we also have people who like looking a little further down the chain. Myself, I'm curious about Ether. I am excited because it has a very strong development ecosystem. There are literally millions of projects being derived on ETH, and I think that could actually cause it to have a larger market cap at some point than Bitcoin. There's something interesting going on called the Bitcoin wrapper, which is a Ether-based coin designed to mimic or mirror the price of Bitcoin. That's been growing. It's in, I think, the top 25 assets now all of a sudden, which is interesting. That says that people want to have exposure to Bitcoin on the Ethereum platform. So there's a lot of technical reasons to be excited about ETH. It's not going away anytime soon. We are invested in it in the firm. But I think that what's fascinating about this coin and the derivatives on it, and this is true for Bitcoin as well, is that it's not totally clear how the IV is supposed to settle in these products. So if the market continues crashing downward like it has all day today, obviously IV is going to go up. But if the market returns to all-time highs, IV is probably going to go up as well. So it's not like a regular equity where normally if the price starts to float upwards, volatility comes in, there's price support, as you would say. The moves are smaller. So we could be stuck at a high IV moment here in time for quite some long time until there's much higher pricing in this market. So I think the people who are buying the deep in the money calls on ETH probably are doing it for good reason in terms of how much premium they're paying in order to achieve a similar long side exposure.
Yeah, that's a good point. People always come to these products, a lot of them I should say really, with this equity volatility mindset that if it drops down, vol increases, if it rallies, it decreases. But of course, first off, as I said before many times, check out our Volatility Views program, listeners, if you're confused by all this volatility nonsense we're talking about here. But in general, movement equates to volatility, and we are certainly seeing movement upside, downside. I don't care. If you're moving thousands of points at a clip, you're going to have some vol, and that's certainly reflected. And that could certainly be the case there, Eric. ETH has been pretty juicy for some time. Not quite these levels, not quite the 150+% levels, but still, it has been pretty juicy for some time, and it does, you're right, it doesn't seem like there's any chance of that going away, at least in the near term, unless these wild swings really die down pretty aggressively. I'm curious, Eric, you guys, I know you look at Bitcoin, you look at ETH. There's been some other interesting sordid sagas out there and some other altcoin of late, including everyone's favorite or perhaps least favorite whipping boy out there in the altcoin universe, which is XRP. Actually getting a bit of a rally this week. It was at 23 cents on our last show. It was almost, a little bit shy, a little bit north of 27 cents, I should say. So about 4 cents north. So apparently, Eric, the death knells that have been sounded out there for XRP, perhaps a bit premature. Do you guys watch or follow or trade XRP at all, sir?
Yeah, we do watch it. And I don't want to speak too much about our portfolio specifically, but we don't trade XRP. It's not a business model that we feel fits the mandate and the standards of a blockchain-derived investment pool. It is an interesting thing. It's a product. It's more like an old gilded system of, in this case, it happens to be banks, but they have administrated a public-private type of blockchain. Very much similar to, I think we talked last time about Facebook's cryptocurrency that it was planning on launching. It's not really a fully disclosed public blockchain, or is the technology that operates it up to the standards that we would like to see in a way that Bitcoin and Ethereum are. So it's interesting to me that it's captured today. I think it's at $12 billion in market cap. That's quite a bit. It shows that the cryptocurrencies still have to be aware of things happening in the regular economy. They are not unbounded to traditional economic activity. And there is a lot of economic activity, particularly in Asia on XRP, but it's not something we're uniquely interested in.
Of course, all these people are flocking to the crypto markets for the first time. They see Bitcoin threatening 40,000. They see ETH north of 1,000. Oh, this XRP thing's 24 cents. I'll take a flyer on a few thousand of those, maybe. Some of that, obviously, propping up the action out there. Of course, we were talking about regulation before. With Bitcoin, that's very much the specter that is looming over XRP right now. The SEC saying it could potentially be an illegal issuing of securities, and that, of course, would cause problems for a lot of the different holders out there of XRP. So a lot of regulatory uncertainty, which has, of course, driven it down off the highs, got up to 60 cents, I believe, not too long ago. But it's nowhere near, it's not trading a penny. So it's got some value. Some folks are obviously flocking in, taking a bit of a flyer here on this 24-cent name, hoping that perhaps maybe it can catch up to some of the other big dogs out there in the crypto space. In terms of altcoin, Bitcoin Cash, Bitcoin SV also moving this week as well. Bitcoin Cash up 26, almost 27 handles from our last show. Bitcoin SV up about 14, almost 15 handles. Again, not the 10,000 plus point swings we're seeing in Bitcoin, but still interesting moves nonetheless. Speaking of interesting, you guys always have interesting thoughts and ideas for us. Without further ado, get to some of your crypto questions.
You've got questions about crypto. Who doesn't? It's time to find out the answers to your crypto questions.
All right, everybody, welcome to the crypto questions segment. Actually got some interesting polls to pay off here on the show. First off, we asked you during the middle of the show last week, gave you a little flash poll. It was kind of interesting, of course. We were in the middle of the massive run-up, which, of course, became the run to 40,000 and beyond in Bitcoin, similar run-ups out there in ETH. So we asked you guys quite simply, has this recent explosion in Bitcoin and ETH made you more interested in trading cryptocurrencies? Yes, no, or these things are a fad? So I guess you can lump that in there with no, but we'd like to give you a fun third option whenever possible out there. And you guys were pretty evenly split out there. 44% saying yes, 40% saying no, and only 16%. You guys are usually cynical. I thought there'd be more of you, but only 16% saying these things are a fad. So Eric, kind of evenly split our audience so far on, even with these massive swings and massive attention being focused on crypto, roughly half of the audience saying they're intrigued, the other half saying they're going to wait and see. Does that surprise you, sir, or is that kind of what you would expect?
It's pretty much in the narrative of having a very discerned, determined group of investors. It's interesting in these prices run up, we have seen a lot of larger investors suddenly try to get involved in the space, high net worth family office types. And they found it's difficult to go and open up a retail derived brokerage account to, put the scale of money that they want to put to work into these markets. So there is a lot more money waiting out there that hasn't really hit yet because of simply the mechanics of it coming to rest. So it's not over in that regard.
No, it is not, but our audience is going to be a little bit on the wait and see side. Speaking of our audience, we asked you guys actually just a few minutes ago, our keen-eared producer on the ball out there, getting it out there for you guys to play along as well. We asked you quite simply, everyone's fascinated and fixated on effectively two assets right now, Tesla and Bitcoin. And they're both not that far from each other in terms of overall market cap. Like we said, Bitcoin right around 600 billion, Tesla about 760 billion. So quite simply, which will be the first to hit the mythical, magical 1T, the $1 trillion market cap. Tesla or Bitcoin? And right now, you guys are already voting hot and heavy. It's only been live for a few minutes. And Eric, it just ticked up again. Our audience is almost evenly, exactly split again, Eric. 51% saying Tesla, 49% saying Bitcoin. Bitcoin's coming on strong. Maybe Bitcoin will take it. Eric, do you have a vote in this, sir?
I'm surprised. I thought having a crypto show, people would be pretty excited about the crypto because there's less structural friction for crypto to achieve that, that market cap. I think what can be said is these two communities think in the same way. People who are buying Teslas and solar power, they see a vision of the future and they're willing to put their money where their mouth is. People who are involved in cryptocurrency see a different vision for the future, which is not necessarily incompatible with the Tesla people. So we might be talking to the same audience.
Well, we very much are when it comes to our networks. Remember, crypto, only one of the many shows we do here on the network. So this is going out to the full audience out there, and I'm sure a lot of them are a little bit more, as we heard, and we saw from their numbers, a little bit more jaded when it comes to crypto. But yeah, it's still ticking. It's fascinating to watch. Evenly split right now, Tesla and Bitcoin. We'll see how that holds. This is going to be live for, I think you got a few more days. So if you're listening to the podcast now, you'll be able to go in after the fact and still vote. It won't just be a flash poll that's live during the show. All right, we'll wrap it up with this question from BTC Trader. Well, I wonder what he's trading out there. BTC Trader wants to know, can you really have a one-lot retail explosion in Bitcoin when a one lot of Bitcoin equates to nearly $40,000? Yeah, that's kind of been one of our themes of the year, Eric, in the broader equity and index options market has been the rise of the retail one-lot trader. Your buddy, Mr. Sebastian, the greasy meatball over there, likes to refer to them as the retail whale. And it certainly was a dominant theme in the options market last year. He makes a good point, though. It is a little bit more challenging to have a similar explosion out there when the underlying is so beefy, and of course, you can have the fractional Bitcoin on the underlying side. And on the options front, as Eric alluded to, we are starting to see more liquidity out there, and indeed a lot more vol. That usually tends to drive players. And you can still trade the one lots in Bitcoin on the premium buying side if you're judicious out there. Selling, you have to have a lot of capital, I would think. And again, options brokers on the Bitcoin front, not quite as, shall we say, bleeding edge from a tech perspective as most of the ones are. You're used to when you're trading your Apple and your SPY options out there. So they may tie up a little bit more capital than perhaps you're comfortable with if you're just trying to go out there and apply your premium selling strategies that you're used to using in those other names I just mentioned. But I think if you look at the fractional Bitcoin, I'll have to crunch the numbers for the next show. That's a good question. But I'm sure we saw a huge uptick in that over the course of the past year. So you can probably equate that to the one-lot options traders out there. But Eric, an interesting question. And maybe anecdotally, if you've been looking at this as well, what are your thoughts on the resurgence or the surge, perhaps, of retail traders out there in Bitcoin over the course of the past year, sir?
Well, I think, what's interesting about Bitcoin is there's two different things happening. You have traders who are principally, basically speculating on the direction of this underlying thing. And then you have people who are using the Bitcoin for some other purpose. They want to buy a fishing boat or a head of lettuce or whatever. It doesn't really matter. They're shopping with it in normal retail exchanges. Unfortunately, that other group that's doing the shopping and the consumer-driven type exchange hasn't necessarily flourished, I think, the way the very early Bitcoin enthusiasts thought it might have developed by now. However, it's still there. And it's still operating, and it's still a very good possibility for the future of these cryptocurrencies. So whether traders can access what they need to in the market space, I think is simply a measure of the mechanics. If the mechanics of the underlying asset make possible the type of consumer economy that is necessary to support the market caps they need and the liquidity they need, then I think traders are going to be able to access what they want to access. I will say that overall, I know there is a raging debate in cryptocurrencies about whether the liquidity on exchanges is legitimate or if it's just bucket shop fictitious numbers happening. Either way, I have found tremendous liquidity with our partners in these markets. So where there's liquidity, there's going to be division of the units, either directly in the assets or in derivatives of the assets. So I would not, as a person who's curious about cryptocurrencies or excited about it, and I don't want to sound like the big crypto shill, because to me this is just a tremendous intellectual journey that the whole world is taking together. And I think if you're curious about this thing, you should get involved and not let the $40 or $50 or $100,000 per unit, Bitcoin price ward you off, so that you would believe that, this market's too big for me, like some of the other traditional financial markets had done to their clients in the past.
That's a good point about the market cap. So and the exchanges playing with the numbers a little bit. So we always tell people to take the overall market cap numbers with a huge grain of salt in the crypto space. But unfortunately, Eric, that music means we come to the end of another epic sojourn through the world of all things crypto derivatives. Quite an epic one it has been, listeners. These movements are, I think to call them unprecedented at this point is sounding redundant. It's becoming cliche. It's becoming rote. These moves, these swings week to week are certainly, at the very least, even if you're not a crypto trader, as Eric just alluded to, it's a space you should be paying attention to. And it certainly has a lot of interesting theoretical underpinnings and perhaps challenges for the way we view capital markets going forward. A lot of fascinating stuff to come. But before we go, Eric, if folks are intrigued, they want to reach out to you guys, maybe they want to pick your brain about what you guys are trading over there at VELLUM. Maybe they want to learn more. Maybe they want to become investors. Maybe they just want to reach out to you and talk crypto. Eric, where should they go? What should they do?
Sure. We love talking to people in this space. Send us an email at info@vellum.capital, VELLUM.capital.
There you go. Info@VELLUM Capital, VELLUM Capital is the place to go. Give them a follow on the old Twitter as well, @VELLUM Capital over there. Get their follower count up over there on the old Twitter machine. And on behalf of Eric and our friends over there at Gemini, remember all of these analytics and all these vol metrics coming at you courtesy of our friends over there at Gemini. So kick the tires and light the fires over there for yourselves. gvol.io is the place to go. And of course, myself, I want to thank all of you out there for downloading, streaming, subscribing, for listening live, for sending in your questions, for voting in our polls, for everything else that you do. Keep it coming. We'll see you back here throughout the rest of the week for all the other program we have hitting you every day pretty much this week. And then back again on Monday for another episode of the Crypto Rundown.
This program is brought to you by Genesis Volatility, also known as GVol, home of institutional-grade crypto options analytics. Whether you're trading CeFi options or DeFi options, cryptocurrencies move. Use GVol Analytics to analyze implied volatility, model realized volatility, structure positions, and unlock alpha. For more information, visit gvol.io. That's GVOL.io. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.